ठीक है, थैंक यू सर।
So, good evening, everyone, and welcome to another session of Golden Charcha. And today, sorry for the delay. That was a technical glitches due to which we are, late by 5-10 minutes. So, without wasting any more time, let's jump into the topic itself, which is a very curious and relevant topic for the day. That is how the money behave based on our behavior. So, it's a behavior study of money as well as the human behavior. So for this, we have a speaker of the day with us, that is Ritunsha Lalwani ji. And along with this, we also welcome CA Udeshi ji for the special addressee of the day. And thank you so much, Harsh ji, for accepting our invite for the special addressee. And we would like to join you for this Golden Charcha session and request you to kindly address the audience, the speaker, and uh, on behalf of EIRC. Over to you, Harshi.
Good evening, everyone. Thank you so much, Amit ji, for this opportunity. I thank EIRC of ICAI for giving me this opportunity, whereby we have been taken a continuous learning approach through Golden Charcha. It is a very nice and meaningful thought that our chairman CA Vishnu Tulsian has come up with, whereby the particular initiative which can be taken as within the fraternity for celebration of thought for the speakers, learned speakers with vast experience and sharing their knowledge. I also thank Ritunsha ji for giving her time for this particular session. So, why we actually think about this particular session is regarding the particular topic is behavioral finance. So, what do we do, and what is to be done with the money? So, we all are, emotional human beings. We have a lot of things in our heart as well as in the mind. We often do certain things, overdo things, which are not actually, willing to take up with. But now we have a learned speaker who is going to enrich us with her knowledge, experience, and wide, decisions that she has taken in a particular practical approach. So I hand over again to Amit ji for giving me this opportunity. Thank you, Amit sir. Back to you.
Hello. Yeah, thank you so much, Harshji, for such a wonderful address for the session and giving us the background for the session. And now moving forward, I welcome the speaker of the day for this relevant and very unique topic, that is the behavior financing. So I welcome Miss Ritunsha Lalwani ji for the day. And thank you so much, ma'am, for accepting our invite to be a speaker of the day. So Ritunsha Lalwani is a senior manager, client relations, and a chartered accountant by profession. She is also a certified internal auditor and CFP. So Ritunsha professional journey includes key role at PwC, Capgemini, and McDermott International, where she has gained deep expertise in internal audit, financial consultancy, and risk management also. Her current role, Ritunsha has successfully managed client portfolios, driven operational efficiencies, and delivered client engagement strategies as well. So she is the right fitted speaker. She is the right fitted speaker for the day. And over to you, ma'am, for going into the deeper, discussion of the topic. So we all welcome Ritunsha ji. Over to you.
So much, Amit ji. Thank you. Hope I am audible.
Yes, ma'am, audible.
Great. Thank you, sir, for the wonderful introduction. And I'll just present my screen. Just could you please confirm if the screen is also visible?
Yes, it's visible.
Okay, great. So yes, good evening, everyone. Welcome to this session, and thank you so much for the opportunity. Uh, it's a privilege to speak with such an intellectual community, chartered accountants and aspiring chartered accountants, on a topic which is very close to our everyday living: behavioral finance. So, this is the side of finance that's as much about human emotion as about numbers. So, let's start simply. In the chat, if you could type a Y, if at any point of time you have made an investment based on your gut feeling, family advice, or news headlines, not data. I mean, though we as chartered accountants look at data for everything, but has there been a point of time, at any point of time, where you have taken any such financial decision on the basis of just gut feeling or news headlines? I would like to see the chat also. Feel free to type in a yes if you have, or no if you haven't. Great. So, yeah, some of you have typed in a yes. If yes is the answer, then you are in good company. The session is about deliberating on the hidden side of these choices. And if, say, for example, your answer is no, that there has been no point of time that you have made a decision which was not based on data, all the decisions are based on data, then amazing. Then you are one of those rare, exceptional categories who are able to segregate emotions from external noise for financial choices. And that is what we'll try to understand today. There is a lot of noise, a lot of clutter around us, informing about various financial nuances. But how do we as chartered accountant community protect not just ourselves but also our ecosystem is what we'll try to see today. Now, why understanding this? As chartered accountants, we are expected to go beyond the balance sheet. Let's have a quick chat poll once again for when has there been any such situation when the markets have been volatile and a friend or a client or an acquaintance has frantically reached out to you to ask, what should I do? Has there been any such point of time in your life? If yes, there has been, click yes, press Y. If no, then no. That anyone may not necessarily be a client who not all of us would be in the wealth management domain or investment management domain. Maybe you are providing tax advisory to a client, but the client is asking you about market volatility, that markets are so volatile, what should I do at this point of time? Should I sell all my investments? So most of you have answered yes, that uh, there has been a point of time, and as chartered accountant, it's been an indispensable role for all of us to not just support our clients for the work assigned, but also to answer their questions with respect to how exactly their investments should be managed. Now, how exactly do we segregate, or do we differentiate between what should be done, or what should be done as what would suit the person in the long run? Of course, seeking professional help is one such aspect, and ensuring that one is aware about the risks associated with the investment, the market risk associated with the investment. But other than that, as advisors at a holistic level, what is our responsibility? In today's time, we all know that clients today are looking at us for reasons that go beyond just tax and compliance. They want guidance through uncertainty, emotion, and even some cover through herd behavior. We are more like strategic partners in today's time. And understanding this human element becomes very, very important. Now, why behavior matters in finance? Traditional finance assumes that everyone would behave rationally. However, in real life, emotions, experience, personalities influence every money choice. Every choice related to money is affected by emotions, experience, and personalities. We have a lot of data, we have a lot of frameworks on which the the various products of the financial markets are running. However, do do that financial markets does that financial market information ensure that how it has performed will continue to perform in the same way? So there is no guarantee or surety of that. And why is that? One of the major reasons is that a lot of things are happening because of the emotions, experiences, and personality influences. Now, let's just recap a bit. Let's just go back into uh, time and try to remember how exactly investors or us as investors have behaved at the times of various financial crises. So, the 2008 financial crisis, the global financial crisis that had happened, anyone can here write in the chat box that what was the approximate percentage drop in the Sensex during the global financial crisis of 2008? A rough estimate, a rough idea. So we are just trying to understand what was the approximate percentage drop in the Sensex during the global financial crisis of 2008. Okay, so one answer we have got. Anyone else would like to take a guess? Great. So we have got two answers, and the actual answer lies somewhere between. We have got one response as 50%, the other response as 70%. It was a fall of 60% that had happened during the 2008 global financial crisis. How about the COVID-19 crash? Any estimate on the percentage when the COVID-19 crash happened? Was it 15, 25, 40%, 50%? Okay, we have got one answer, 20%. So the fall that had happened during the COVID-19 crash was around 38%. The Sensex plummeted by 38% in a short span. While many people exited in fear, those who held on saw their portfolios bounce back significantly. Then there was also demonetization. In demonetization, everyone started rushing towards perceived safe havens, that okay, gold, real estate are the safe havens, let's move towards there. The irony was Indian equities delivered positive returns in the 12 months following the demonetization. Now, these are the numbers of how exactly the markets had fallen. Let's try to understand how exactly the proof that patience wins, or how exactly the markets recovered also. So let's take a real life scenario, and let me just go back to a couple of examples here. So here is just an example of someone who had invested, say, 10,000 per month in the Indian equities, say in an index fund, in an index mutual fund, starting January 2020. Starting January 2020 up to 30 June 2020, the person had invested. This scenario, during the investment, the amount invested during this period, around 6 months, and this of course was the period when COVID pandemic had struck. Invested amount was 60,000. The closing value came to 59,000. The person panicked and started selling by June 2020, leading to a diminishing return, a lesser return of by 1.28% XIRR. Now, what if this person could have sustained the volatility of the market, continued his investment, his or her investment, from January 2020 up till December 2021? I have hidden the numbers here. It's just imagine an investment in a normal index fund. Any guesses on what would have been the XIRR of the person if he would have continued to invest up till 2021 and not have redeemed in June 2020? If he would have not panicked, any guesses on what would have been the returns? The percentage can be anything. Maybe the person did not make any money because maybe he was right in taking the call of exiting in June 2020. So can it be 0%, 10%, 20%, or negative? So if the person would have started an SIP in, I'll repeat the question for the benefit of everyone. If the person would have started an SIP in an index fund, a normal index fund, in January 2020, continued up till December 2021, sustained the entire COVID period. We have got one answer, 6%. We've got another answer, 5 times the investment. Any further answers? Let's see how exactly, and these are real numbers. These are not something which is only on the basis of futuristic data that we are showing. This is actual numbers. So the person would have invested in the 2 years an amount of around 2,40,000, and the actual returns that would have been generated would have been a 32% XIRR. So if simply the person would have panicked and stopped, no, markets are falling, I cannot go further, and stopped, the returns would have been negative. The person would have exited and then maybe sat on cash or purchased some gold and just trade there in terms of the returns that the equity markets would have given. Now, whether gold is a good choice, not, etc., that is an entire different ballgame of discussing about asset allocation and risk profile. However, here, if we see that if the person would have continued in the same, stayed invested in the equity, he would have made a 32% XIRR. So that is the game of how exactly just panicking in a situation can lead to loss of certain returns. But then does it mean that one should never exit? One should just continue staying invested in long run? So these are just examples that underscore the importance of behavioral coaching to prevent clients from making costly, irreversible decisions during market downtown specifically. So there might be a situation that a person could have booked better profits in the holistic scheme of things, could have taken advantage of, say, a tax exemption for long-term capital gains, and that would have made a better financial decision. However, in behavioral finance, what we are trying to see here is the person should not be making costly, irreversible decisions just because there is a market downturn. So, just coming back to the definition of behavioral finance once again, behavioral finance blends psychology and money. It explains why even well educated investors act against their own interest during stressful times. What are the various kinds of investor personalities? And now this investor personality graph, it's by a renowned finance professional, Smith. 2009 this study had come out, and these are the 4 categories in which investors can be categorized. You yourself can see that in which category do you fall in. One is an individualist, followed by an adventurer, followed by a guardian, or a celebrity. So what does an individualist do? If the screen is visible, I hope I'll just call it out. Individualist is somewhere between a confident and a careful investor. So one, he will be confident, yes, but he would also be careful and cautious. Who is a guardian? Someone who is between careful and anxious. You would have met a lot of people who are anxious about each decision and are also very, very careful in making each decision. Such people fall under the category of guardian. What is the third category? Someone who is at the intersection of confident and impetuous. They are confident, yes, but they are not careful like individualists. They are impetuous and make such decisions. These are adventurer nature. And then there is the last category, which is anxious and impetuous. So they are not just making anxious calls, but also not very patient in making decisions. They quickly make anxious decisions. Markets are following, let's sell everything. This is the category of celebrity in investor personality types. So in few words, if we are to describe, individualist, analytical, independent, and confident. They would make decisions based on careful analysis. They would be confident about their decisions. Adventurer, bold, spontaneous, and high risk taker. So they will be confident and impetuous. Guardian, they will always be cautious. They will be careful and anxious. And wealth protection is their focus. And then comes celebrity, who are trend follower. They seek what's hot in the market, what's on the news, which is currently on the highlight, and they will be investing there. So these are the celebrity type. So knowing such personality types helps tailor advice of how exactly we should be advising or suggesting. If we advise an adventurer personality, something which would suit a guardian personality, it may be a scenario that the adventurer would say, no, I would want something which is more high risk, suggest something which is more high risk. Or else, if we ourselves are a guardian personality and someone is suggesting to us that, okay, why don't you see at this stock? Why don't you see at this scheme? Why don't you see at this EIRC? Which is more on the high risk, high reward side, we would not be aligned with that. So thereby it becomes important to understand the difference, the characteristics and the tendencies of different investor personality types. And that will also help better anticipate their action and, more importantly, their reaction, and serve them accordingly. Now, if we move ahead, we talk about these were the investor types, but what are the various rationale or logics that people have in their mind when making decisions? Now, holding on to poor investments, I mean, someone has purchased a particular share and then continues to hold that is something that we would have all heard. Maybe we would have experienced in our own investments. to not waste that past money, as we say that we cannot separate from that considering it's a sunk cost already. This is what is called as cognitive dissonance. So it's a mental discomfort arising when new information, maybe the share cannot perform well, but at one point of time, investor felt that this is the multi-bagger. So the person would feel that it's not justified. He would feel that it's a mental discomfort to part from that share. Confirmation bias. This is a tendency to seek and favor information that confirms with one's existing beliefs only. So the person would only read the news which is confirming his opinion, his or her opinion. So if the person believes in, say, the pharma sector to go up, the person would read information only about the pharma sector going up. But if there is another sector which is currently performing better or can be considered for, say, investments, etc., the person would not read that. So that is known as confirmation bias, seeking only information that supports beliefs. What is conservatism? Reluctance to update beliefs quickly despite new evidence. So in cognitive dissonance, one has a mental discomfort in accepting new information. In conservatism, one would just like to stick to what, there is a reluctance that one would just like to stick to what one knows. So in every situation, if someone is coming to us for an advice, it is very important to encourage people to look at facts with a fresh lens. Undoubtedly, there can be people, and there are a lot of biases. There is anchoring, there is mental accounting, there is recency bias. All of these biases we would have seen, felt people going through. Anchoring means that, okay, I have purchased something at 500, I will sell only when it returns to the price of 500. Or rather, I have purchased something at 450, the price went up to 500 once. Currently, the price since the last 6 months has been 400, but no, I will continue to hold it. I'm sure that the price will go up to 500 because it had once touched 500. So this is like anchoring on the beliefs. So there are different types of biases that people might have in their minds. It is very, very important to show the bigger picture, to show from a fresh lens, and not just recent events, not just their own anchoring biases. So that is where the very first step gets cleared. Of course, looking at data, understanding data, we all know as chartered accountants, it's very, very important. But the first step of removing those investor biases in information processing is very important, or else the person will continue to hold on those biases. Even if the data is saying something else, the person will continue to hold on to making their own decisions in their same way. These were the information processing biases. There are also emotional biases. For example, loss aversion. In very simple words, people feel twice as painful when loss happens as gains feel good. So when there are gains, they would feel less happiness, but when they would feel a certain level of happiness, when there are losses, they would feel twice as painful. There's also overconfidence. We all have had people around us who are overconfident about picking winners, that, oh, I just pick winners. If this is something that I have picked, it would turn out to be a winner. Status quo bias, preferring to do nothing instead of changing. Now, there can be a scenario where for a person, overall investment portfolio, it does make sense to rebalance the portfolio. But status quo bias avoids or refrains a person from changing that portfolio. So these are the various kinds of emotional biases. Talking about the various money personalities. Now, again, feel free to categorize yourself or the people that you know in one of these categories, but all of us would fall under one of these categories only. Hoarders who love saving find it hard to spend. Sorry. Risk takers who love the thrill of risky bets with respect to their money, spenders who enjoy today and struggle to save, bingers, like we talk about binge watching any television series, there are bingers who are saving surplus and then splurging also. So there is a cycle that goes on. They would save a lot and then splurge a lot. And warriors, constantly anxious about money. So these are the people who would consciously anxious about money. Now, what we can do is understanding these money personalities for our own selves also. It helps us to design plans for us that we can follow. And if someone is in the wealth management investment advisory domain, this will help to create plans that people can actually follow. So now these were the overall universal personality types. What happens generally in India? And since we are already at 5:46, I'll try to wrap it up in the next 5 to 6 minutes, and open up the session for Q&A. Let's talk about how exactly the cultural and social bias in Indian finance run. So we all have been, since childhood, have been taught that saving helps, and hence thereby India has a very high saving rate. The allocation often skews towards immediate gratification or socially visible expenditures. Now the problem is that even if we are saving high, the spend that is happening is for something which is socially visible expenditure. So one would want to travel to showcase to others, want to spend on weddings, for instance, are often over prioritized in spending, sometimes at the expense of crucial long term goals like retirement savings or children education. Festive spending spikes. How many of us would have seen that the budgets that we have made for our own personal finance have shot up because of the festive season? And the enormous popularity of lotteries in India, which generates over 1 lakh crore annually, highlights a significant behavioral bias. So one person thinks that, okay, if one has won, I can also win. So let's just try it out. In financial domain, what are the actual real life money behaviors in India? An obsession with gold, which we all know in the current times could have given very good returns, but in the equity or in the overall asset allocation basket, if we speak about, there is no such asset class which has given positive returns on a year-on-year basis. Real estate bias, despite of the rental yields often hovering around 2 to 3% and significant capital commitment, the adage that, oh, land never loses value, derives sustained investment in real estate. So even today, people, often fueled by anecdotal success stories, ignore market cycles and the illiquid nature of the property. And of course, the latest, there is IPO mania and crypto craze. It's fueled by herd behavior and fear of missing out, the FOMO. Retail investors often jump into IPOs or speculative assets like cryptocurrencies. The allure of quick riches combined with social stigma of being categorized into FOMO often leads to significant losses when markets correct or when the respective bubbles burst. So how can we, for ourselves, help us our way to success, or help the people in our ecosystem behave their way to success in terms of finance? So focus on goals. The approach towards achieving financial well-being should be focused on goal-based investments and not on the noise. Someone is saying this is a good pick, let's go ahead and do that. That should be avoided. A disciplined process including of asset allocation risk profile, a small portion for experiments. So a tactical component of the overall portfolio can also be for experimentation, like hot trips, what are the latest trends. And lastly, being a behavioral coach, we for our ecosystem can be a behavioral coach along with being brilliant chartered accountants. So when we understand people's behavior, we don't just manage money, we guide financial well-being. So hope the session helped about understanding how exactly there are various nuances of behavioral finance. Of course, it's a topic that requires years of study and research. Talking about it in an hour is only about adding some flavor to the already nuanced understanding of financial domain that we have. But overall, the intent is through discipline, through proper asset allocation, through proper risk profile, we ensure that we are guiding ourselves and the people around us for an overall financial well-being. So that was it from my side. Any questions, any deliberations, would be happy to address. Also, if you would like me to go back to any of the screens, any of the slides, would be happy to do that.
Ma'am, it will be
Amit,
great if you can just summarize
yeah.
the whole session in might be 5 to 7 minutes. If you can just summarize the whole session and the do's and don'ts in regarding to the behavior financing. So that will be a great for all the participants.
3 minutes, and then Brajesh ji wants to ask a question orally. So we can then let him ask the question orally. So if I am to summarize the entire session, firstly, we spoke about how exactly behavior matters in finance. We as chartered accountants have been looked at for advisory from all sides. And when an advisory, someone is seeking an advisory, it's not about just looking at numbers, it's looking at data. It's also about understanding the psychology which is behind asking that questions. And this psychology plus finance combination is what leads to better decisions. Now, how to understand the psychology or how to ensure that the person is uh, able to sustain the inherently volatile financial markets, it would be through a very important do's, as you had asked to suggest. A very important do's would be to ensure that the person is aligned with his or her asset allocation and risk profile based investing. Now, these are some specific nuances in wealth management, investment management domain, and these there have been several uh, matrices that have been developed to understand that, okay, what category of risk profile personnel should invest how much in which asset class, and thereby the importance of asset allocation also comes in. And this is where the discipline is very, very important. Discipline to not just stay invested, but discipline to also uh, stay consistent with, if a person would like to review his or her portfolio every 6 months, to follow that disciplined process of reviewing the portfolio every 6 months, and not just looking at the markets every day and seeing that the markets have fallen or the markets have corrected. So that would be one of the most important do's. With respect to don'ts, understanding of these biases can help us just understand that these are games that our mind plays with us. Loss aversion, overconfidence, staying, no, okay, I am okay with being invested in this particular asset class and I'll continue to do that only because I'm currently invested. These biases as if we would understand that these are only related to how exactly our mind is playing with us, we would be able to better overcome them. So that is very, very important. Don't just let the psychology play games in terms of finance. Ensure that one has a very disciplined asset allocation and risk profile based approach for managing their own personal finance. That is how I sum up. If you could please unmute the participant who has a question, and maybe we can address that.
Yeah, thank you so much, ma'am. So like we can move to the question answer round. If any of the participants have any question, they can write down in the chat box or can ask orally as well. So Brajesh, you want to ask some question? I will just try to unmute him.
मैम मेरी आवाज आ रही है क्या?
Now you can ask your question.
मेरी आवाज आ रही है क्या?
हाँ हाँ आ रही है ब्रजेश जी.
थोड़ा loudly if you can speak please.
मैम मेरा क्वेश्चन है ये है कि अपने आपका प्रेजेंटेशन तो बहुत ही अच्छा है, और क्योंकि अपने जनरल प्रैक्टिशनर हैं, आपके प्रेजेंटेशन में कुछ वर्ड ऐसा है जो हमने आज तक एनकाउंटर नहीं किया. आपका थोड़ा सची थरू टाइप प्रेजेंटेशन है और हम लोग का लेवल थोड़ा नीचे, मेरा खास करके हम लोगों का नहीं, मेरा. तो मेरा क्वेश्चन है मैम कि अपना जो स्टॉक मार्केट है ये क्या ओवर स्टेटेड है कि इतना सही है? नंबर 1. नंबर 2, अपने यहाँ पे क्योंकि गवर्नमेंट जो है सर्टेन परसेंटेज ऑफ पीपल को पैसा ट्रांसफर करती है डायरेक्टली और कुछ को राशन देती है डायरेक्टली, तो ये मार्केट में इन्वेस्ट कौन कर रहा है? और तीसरा क्वेश्चन ये है मैम कि हम लोगों को कैसे पता चलेगा कि 2008 में या 2010 में सेंसेक्स अगर इतना था तो आज 85,000 हो जाएगा या 82,000 हो जाएगा? क्योंकि तो होने के बाद पता लगता है, क्योंकि इसी में आपका यस बैंक भी है, इसी में आपका वोडाफोन आइडिया भी. जब आदमी वोडाफोन में इन्वेस्ट किया था उसमें 2-3 प्लेयर थे, BSNL था, वोडाफोन था और एयरटेल था. नया प्लेयर रिलायंस आ गया, जियो, और वोडाफोन खत्म हो गया. तो जो लोग वोडाफोन के इन्वेस्टर थे, जो सोच के इन्वेस्ट किए थे, उनका क्या? और यस बैंक में अदर बैंक भी सपोर्ट कर रहा है, बट यस बैंक ऊपर नहीं जा रहा है, लेकिन मार्केट हमारा 82,000 पहुंच गया, ये लोग उसमें पार्टिसिपेट नहीं कर रहे हैं. बस ये सब थोड़ा 2-3 आंसर कर दीजिए. मेरा नोविस क्वेश्चन है, जानता हूँ, बस को जरा आंसर कर दीजिए, अच्छा रहता.
सर ऑल ऑफ देम आर वेरी ब्रिलियंट क्वेश्चन सर, बहुत ही इंपॉर्टेंट क्वेश्चंस, प्रैक्टिकल क्वेश्चंस है. नाउ नॉट गोइंग इनटू एनी स्पेसिफिक स्टॉक एडवाइजरी या कि ये स्टॉक ऐसा है, ये स्टॉक मार्केट ऐसा है, मैं आपका एक एक करके क्वेश्चन आंसर करने की कोशिश करती हूँ. आपने पहला क्वेश्चन ये पूछा कि वेदर द करंट स्टॉक मार्केट इज अंडर वैल्यूड और ओवर वैल्यूड. नाउ द एंटायर स्टॉक मार्केट सर हैज पॉकेट्स. आपने देखा होगा स्मॉल कैप, मिड कैप, लार्ज कैप. इन पॉकेट्स में आपका इन्वेस्टमेंट किसी भी कैटेगरी में हो सकता है. अगेन विद इन दोज पॉकेट्स देयर आर सेवरल सेक्टर्स. आपका डिफेंस सेक्टर में इन्वेस्टमेंट हो सकता है, आपका PSU सेक्टर में इन्वेस्टमेंट हो सकता है, फार्मा में इन्वेस्टमेंट हो सकता है, फाइनेंशियल सर्विसेज में इन्वेस्टमेंट हो सकता है. अब हम बात कर रहे हैं एक कंसोलिडेटेड स्टॉक मार्केट की कि वेदर वो अंडर वैल्यूड है कि ओवर वैल्यूड है. तो ऐसे ओवरऑल आंसर करना कि ओके करेंटली इट इज अंडर वैल्यूड, करेंटली इट इज ओवर वैल्यूड वुड not support the concept of finance in general. What is important for us to see is हर सेक्टर के बारे में इंफॉर्मेशन इज अवेलेबल. से फॉर एग्जांपल आप स्मॉल कैप्स के बारे में इंफॉर्मेशन अगर देखना चाहें, यू कैन, आप उसके बारे में गूगल कर सकते हैं, आप देख सकते हैं कि वेदर स्मॉल कैप्स आर अंडर वैल्यूड करेंटली और ओवर वैल्यूड से उनके प्राइस अर्निंग रेशियो के बेसिस पे. अब second important question जो आता है, and just linking it back to our session that we did today, कि अगर स्टॉक मार्केट ओवर वैल्यूड है तो क्या मुझे इन्वेस्टमेंट नहीं करना चाहिए, या ये सर्टेन सेक्टर, I'll correct myself, ये सर्टेन सेक्टर ऑफ द मार्केट ओवर वैल्यूड है तो मुझे इन्वेस्ट नहीं करना चाहिए, ये सर्टेन सेक्टर अंडर वैल्यूड है तो मुझे क्या अभी इन्वेस्ट कर देना चाहिए। हमारा सर थंब रूल, जैसा कि मैंने डूज पूछने के सजेशन पे बताया, थंब रूल होना चाहिए हमारा असेट एलोकेशन एंड हमारी रिस्क प्रोफाइल। अगर हम मार्केट की हर साइकिल को कैप्चर करने की कोशिश करते रहेंगे, there is no end to it. And Sir Warren Buffett sir himself says that he cannot time the market. So how can people like us? So it is very important to have a disciplined approach, asset allocation और risk profile से derived. अगर आपका risk profile aggressive है तो आपका investment style अलग होना चाहिए considering the markets and their valuation. अगर आपका risk profile काफी conservative है तो आपका asset allocation अलग होना चाहिए. Quickly asking the second and answering the second and third questions about the various schemes that government runs and how exactly their impact on market would be. Now, as we would know that पूरे ecosystem को sustain करने के लिए it becomes very important for the benefit of several people. अभी आप देखेंगे प्रोविडेंट फंड में या एनपीएस में एज अ रिटायरमेंट प्रोडक्ट कभी भी इक्विटीज एज अ कंपोनेंट पहले नहीं हुआ करता था, बट इन टुडेज टाइम it has become so important to have equities in the retirement products also that government themselves have mandated कि okay, अगर एनपीएस में आपका रिस्क प्रोफाइल ऐसा है तो आपका इतना कंपोनेंट इक्विटीज में रहेगा, डायरेक्ट इक्विटीज में रहेगा. So this is how the entire ecosystem plays a very important role in ensuring that everyone is growing at a certain rate together. ऐसा नहीं होगा कि एक पर्सन हाँ हमेशा डिप्स पे खरीद के महंगा बेच दे तो उसको हमेशा ही प्रॉफिट होता जाएगा. Trends have proven and shown, and there are a lot of studies that disciplined approach works better than timing the market, and time in the market is better than timing the market. And lastly sir, आपने पूछा कि सेंसेक्स, how would one know कि past में फ्यूचर में कैसा परफॉर्म कर जाएगा. Undoubtedly sir, these are past numbers that we are talking about, and here also जब भी आप अपने फाइनेंशियल प्लानिंग कर रहे हैं या आप किसी इन्वेस्टमेंट एडवाइजर से फाइनेंशियल प्लानिंग करवा रहे हैं फॉर योर क्लाइंट्स और एडवाइजिंग देम, इट बिकम्स वेरी इंपॉर्टेंट टू कंसिडर दैट हाउ एग्जैक्टली India's GDP is growing, how exactly the inflation is growing, and what is a conservative rate at which you can consider कि आपका इन्वेस्टमेंट्स बढ़ेगा. अब वो हो सकता है पहले साल में 6% से बढ़े, दूसरे साल में हो सकता है 14% से बढ़े, बट वो जो आप एक एवरेज नंबर लेंगे अपना प्रोजेक्शंस अपने गोल्स को मीट करने के लिए, वो एवरेज नंबर कंजर्वेटिवली पिक करना जरूरी है. तो ऑफ कोर्स फ्यूचर कोई प्रेडिक्ट नहीं कर सकता. पास्ट रिटर्न्स वी ऑल हैव सीन आर नॉट गारंटी ऑफ व्हाट फ्यूचर रिटर्न्स वुड बी, बट आप अपने asset allocation and risk profile, and I'm just repeating that again and again because those are the very important aspects. asset allocation and risk profile के basis पे and overall macroeconomics के basis पे एक number arrive कर सकते हैं that this is the number at which I see my money growing, and उसके हिसाब से एक disciplined approach follow कर सकते हैं. Hope I was able to answer your question, sir, but thank you so much. Those are very relevant, very important questions. And meanwhile, I would also like to take the opportunity to thank EIRC, thank CA Harsh, Satish, Udeshi ji, and Amit Agarwal ji for this opportunity. It was lovely exchanging insights with all of you. I will just write down my email ID here if that is okay, sir. In case everyone wants to reach out to me, please feel free, and it would be lovely to stay connected and have further discussions.
Yeah, Ritunsha, before we go for the vote of thanks, there is another question from Mr. Bhavesh. So his question is, if we find that price movement of a stock is erratic, how should one decide whether to sell or wait in hope?
Oh, again, sir, not going into the specific nuances ki, okay, this is the right time to sell, this is the right time to buy, because अगर फॉर इंस्टेंस आप उसके फंडामेंटल स्टडी करके यू टेक अ कॉल दैट ओके ये सही टाइम है कि हम इसको सेल कर सकते हैं, ये सही टाइम है हम बाय कर सकते हैं. देयर कैन बी अ सिनेरियो, फॉर एग्जांपल आप ये कंसिडर कर लीजिए कि प्राइस मूवमेंट जैसा आपने कहा एरियाटिक चल रहा है, आप डिसाइड कर रहे हैं कि ओके आई विल गो अहेड एंड sell it once it has reached this particular price based on my data analysis and study, and मैं उसको इस प्राइस पे बेच दूंगा. Tomorrow what happens is that particular sector has been say granted a subsidy or granted some government incentive leading to the entire sector prices going very up. Now this would not just depend on the subsidy or the external push that has happened, it would more depend on the market sentiment. अगर मार्केट ने उसके सेंटिमेंट को ऑलरेडी कैप्चर इन कर लिया होगा उसका प्राइस में, तो पिछले 10 दिन में उसका प्राइस ऑलरेडी बढ़ गया होगा. अगर मार्केट ने अभी तक कैप्चर नहीं किया होगा, हो सकता है अगले 10 दिन भी ना करे, हो सकता है उसके बाद करे वो प्राइस में अपना दिस कैप्चर. सो टेकिंग अ डिसीजन दैट ओके दिस इज डेटा एंड एक्सटर्नल फैक्टर्स इंक्लूडिंग ये प्राइस है जिसपे मैं बेचना चाहूंगा would be incorrect. What is more important is, again going back to the same thing sir, sorry at the cost of repeating myself, I would say that आपके रिस्क प्रोफाइल के बेसिस पे अगर आपको लग रहा है कि अच्छा मैं इतने तक का लॉस बियर कर सकता हूँ या मैं इतना प्रॉफिट बुक करूंगा, then at that is the point of time that one should be selling that. Overall sir, investment management, overall behavioral finance sir, is all about understanding your alignment with finance, and it's not about how exactly उस stock का price जाएगा in terms of the markets. So it's very important to align yourself with the comfort point of when you would like to buy or sell.
Okay.
Hope
Thank
that
you
answers.
so much. Thank you so much, Ritunsha, for answering all the query the participant had. And thank you so much for this wonderful session. So my take away will be like how to control our emotions, our nerves, and the decision should be based on the data and the purpose rather than the emotions. So that is the takeaway, that how we are, positions to take risk, how much risk reward we want, how much amount we have invested, and what kind of return we want. And accordingly, we should see the external factor as well, which is affecting our investment, and then take a wise decision based on the data and the external factor as well as our risk taking capabilities. So that is, I guess, the whole crux of the thing. So thank you so much for this wonderful session. And again, and on behalf of EIRC, on behalf of myself, Amit Agarwal, as well as the special addressee of the day, Harsh Udeshi ji, we really appreciate you taking us time and sharing your expertise and knowledge with us, and guide us how to invest in a right way with a data-driven and purpose-driven thing. And we hope to host you again in the near future. And thank you so much again for this wonderful session. And thank you all the patientful audience, and the special addressee of the day, Harsh Udeshi ji. Thank you so much for joining the session. And we will meet you all again the next week as per the format of the program Golden Charcha, every alternative day, Monday, Wednesday, and Friday from 5 to 6 o'clock, with another speaker on another fresh topic. And thank you so much again, Ritunsha Lalwani ji, on behalf of EIRC and host Amit Agarwal. And thank you, Harsh Udeshi ji, for coming as a special addressee. And thank you all the participants for such a wonderful listeners. Thank you so much, everyone.
Pleasure sir, thank you.
And
so
ma'am,
much.
you can just leave your contact detail and mail ID if anyone willing to connect you for any such query. They can directly connect you over the mail or whatever mode you want.
Sure sir, I have already written, I'll just drop down my contact number also. Thank you so much everyone, and have a good evening ahead.
Thank you so much. Thank you so much, ma'am.
Bye.